Stocks on Wall Street slipped for the third straight session as fears of aggressive rate hikes dent risk appetite. Yields surged yet again with the 10-year and 2-year Treasury yields hitting fresh multi-year highs. Stocks in Europe tumbled. The Stoxx 600 sees cuts of nearly 2% as the Bank of England hikes for the 7th consecutive time. The Swiss National Bank too hikes to 0.5%, bringing an end to negative rates in Europe. And Asian markets open with cuts as investors digest global rate hikes. The Japanese markets are shut for a holiday. The SGX Nifty indicates a lower start for the Indian market. And the board of Tata Steel approves the merger of 7 Tata Group companies with Tata Steel. Listed entities include Tata Steel Long Products, Tin Plate, Tata Metallics and TRF. After a tragic incident involving third-party recovery agents, the RBI directs Mahindra Finance to immediately cease recovery and repossession activity via outsourcing arrangements. Recoveries may still be carried out via its own employees. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top stories that we're tracking for you this morning, and we have a lot to get to clearly. But first up, let's go through what's happening as far as the global markets go. We did get yet another weak session on Wall Street, and you're now seeing those losses being reflected in the Asian markets as well. So what's looking the worst this morning is the Korean markets. The Kospi index seeing cuts of around 1% right now. Hang Seng is down 0.25%. Taiwan at similar levels, around 0.3% lower. You also have the Straits index, which is around 0.8% in the red. So that one is looking a little bit weak. Do remember the Japanese markets are shut today on account of a holiday, so you don't have any rates coming through from Japan. But the rest of the markets definitely opening with some cuts. So let's also bring the SGX Nifty up for you because that is indicating that we will get a negative start to trade for our own markets. We're currently 70 points lower on the SGX Nifty. So that's what's going on across the Asian markets. But let's also talk about the US now. Wall Street ended Thursday's trading session lower for the third straight day. So the Dow Jones was down over 100 points. The S&P 500 fell around 30 points at the close. And the Nasdaq Composite saw cuts of 1.5%. Remember, we also got Accenture's earnings, and that did weigh on the IT pack. CNBC's Mike Santoli is here with a wrap of all of that action from Wall Street. Mike.
Investors aren't really sure which way to turn. That's what one prominent Wall Street strategist told me live on CNBC just before the end of today's trading. He sees signs the market is ready to rebound, but the Federal Reserve is making it clear it will keep raising interest rates. That's a negative for stocks. The Dow spent most of the day in negative territory, closing with a loss of about 1/3%. The S&P stayed in the red all day, ending down almost 1%. And the Nasdaq finished 1 1/3% lower. FedEx is raising rates by an average of 7% and cutting costs by more than $2 billion after its profits were slammed by weaker demand around the world for shipments. That weakness could be a warning sign a global recession is coming. That's the action from the U.S. market. Back to you in Mumbai.
Mike, thanks a lot for getting us all of that action from Wall Street. But let's also bring you some interesting opinion. This comes in from former Fed Vice Chairman Roger Ferguson, former Dallas Fed President Richard Fisher, as well as Nuveen Saira Malik.
I think the market has caught up with the Fed as of today. I think the challenge is the Fed may find itself going maybe faster than it currently expects. And so I think that's a little bit of the dilemma here. They were clear yesterday about the message of higher, more quickly and for longer, and I think the market heard that. But now the incoming data, I think, will drive whether or not the Fed executes the plan as laid out or actually has to, turn even a little faster. So I think that's the dilemma right now.
I don't think they're going to stop. I think they are front-loading as much as possible. There is a lag, as you pointed out. Let's say you're a woman running a company. You're trying to figure out, do I accelerate my receivables, lag my payables, all the way up through CapEx and everything in between, inventory management, et cetera. That's why it takes time to work its way through the economy. That process is underway right now. Their reading is that the labor market is so strong. We have the Phillips curve is back. We have a wage price spiral, and they have a lot of leeway. And they're going to exercise that leeway.
Yesterday's FOMC meeting was a tough pill for markets to swallow, and I think this likely continues for 3 reasons that came out of the Fed. They're talking about higher inflation, higher interest rates, and higher unemployment. What we've realized is that inflation is going to be here for a while, and the Fed has to continue to increase interest rates, that isn't headwind for equity markets. There's other areas that still are shoes to drop, such as earnings. We're seeing third quarter earnings estimates start to decline so far by about 5%, but still positive earnings growth for the rest of this year and through 2023 is a challenge for the markets, along with the strong dollar. I think it's just more challenging now even than it was a year ago.
All right, that is some important opinion coming in on the U.S. markets as well as how the Fed could move from here. But with that, let's also bring you some important data. The number of Americans filing for claims for unemployment benefits increased moderately last week. So initial claims for state employment benefits rose 5,000 to 213,000 for the week ending September 17th. This is according to the Labor Department data. And this indicates that the labor market remains tight despite the Federal Reserve's attempt to cool demand with aggressive interest rate increases. So that is some important data that we're tracking out of the U.S. as well. But with that, we're on to our final update for our global market wrap. European markets ended Thursday's trading session sharply lower. So the French CAC index as well as the German DAX, we saw them sliding over 1.5%, and the British FTSE index closed with cuts of over 1%. Now, the Bank of England raised rates by 50 basis points, which is lower than the 75 basis points which was expected by some analysts. In fact, BOE said that there has been further signs of continuing strength in domestically generated inflation since August, but the recent energy price cap would potentially lower consumer prices going forward. In fact, if we're talking about Europe, the Swiss National Bank also raised its benchmark interest rates by 75 basis points on Thursday. This comes after inflation in Switzerland hit 3.5% last month, which is the highest rate that we've seen in 3 decades. So this also brought an end to the negative interest rates that we had seen in Switzerland. But that's everything that we're tracking globally. Let's talk about everything that you should watch now as we get into a fresh new trading session for our own markets. We have Rima, Mangalam as well as Vivek joining us now with the trade setup and to take us through all of the stocks that could be in the news today. Guys, a very good morning to all of you. Rima, we just went through all of the global market cues, but take us through everything we should watch from a domestic standpoint.
Well, there's so much about global, right? And that's going to take center stage. So Wall Street, as you pointed out, ended lower for the third consecutive day. The Nasdaq had cuts of as much as 1.4%. The US 10-year yield continues to rally higher, now at levels of 3.7, which compares with 3.55 a day prior. The dollar index still hovering well above 111 levels. Across the world, we are seeing interest rate increases. The Bank of England raised rates for the 7th time in a row, and they said that they will continue to respond forcefully as necessary to tame inflation despite the economy entering recession. The Japanese markets are shut today, but the rest of the Asian markets are subdued. The SGX Nifty is suggesting a slightly lower start, but remember, the Indian markets have been fairly resilient. We've gotten away with limited cuts was the weakness that we've seen in the global markets, which are still hungover from, the Fed rate hikes. The Nifty support will be seen at 17,430, and the rupee weakness, remember, makes it unattractive for FII inflows. We've seen the rupee weaken to levels below that 80 mark, and that's going to be an important metric to track. In terms of flows, yesterday the FI sold 2,500 crore in the cash market. It was a big sell figure, while the DIIs bought 263 crore in the cash. So net, the institutions were net sellers to the tune of more than about 2,200 crores. Back to you.
All right, Rima, thanks a lot for taking us through all of those cues. But let's also bring Vivek in. He's going to take us through all of the stocks that we should watch out for. Vivek, good morning. We had lots of important stock-specific news post-market close yesterday.
Well, good morning. Whole host of very important developments that have happened overnight. None bigger than Tata Steel. So what's actually happened is that the Tata Group has decided to put under Tata Steel all of the metal and mining subsidiaries of the company. So Tata Steel Long Products, Tin Plate, Indian Steel and Wire Products, S&T Mining, Tata Metallics, TRF, as well as the other Tata Steel Long Products. All of them will now be amalgamated and will be under the Tata Steel banner. We're also watching M&M Financial. Negative development coming in here. RBI has directed the lender to stop recovery operations via third-party agents. We're also looking out for Hero MotoCorp. Effective immediately, the company has announced price hikes across various segments of its motorcycles. We're also talking about Cipla, some positive news flow coming in. At the end of the PAI, the pre-approval inspection for the Indore plant, the company has received the establishment inspection report, which means that this particular inspection is now closed. We're talking about Glenmark Pharma, some mixed news flow coming in here. the US FDA had inspected the Buddy unit, and post this particular inspection, the company in June had said that the US FDA had given 6 observations in the Form 483, but after watching the company's CAPA, the US FDA has now said that the OAI, the official action indicated status as far as this particular unit continues. On the other hand, some positive news flow as well. The Aurangabad facility has received the EIR. We're also watching out for IOL Chem. The company has made a significant investment in a US novel drug delivery technology company. Lastly, Bombay Dyeing, post the board meet yesterday, the company has approved 900 crores of fundraise via the rights issue.
Vivek, that's a long list. Thanks a lot for taking us through all of those stocks. In addition, also keep your eye out on the entire domestic IT space, because we've got Accenture's Q4 earnings and the guidance for FY23. So the read-through for Indian IT is important to track. But with that, let's hand it over to Mangalam. How are the cues looking in the futures and options space, Mangalam?
Well, good morning. Despite the resistance of the Indian market over the last couple of trading sessions, point to point, we have seen 2 negative closes. And what that has done is that has brought back shorts in the system. FIIs have sold, 2,400 crores in index futures in yesterday's trading session, and they added 28,000 short contracts. What does that mean? Well, remember between September 16 and September 19, we said that the FII shorts are throwing in their towel. 30,000 short contracts were covered. Well, it took them just 2 trading sessions to go back and add 38,000 shorts in index futures itself. So as a result of which is FII net shorts, which is basically long short minus the long contracts that they have, on September 20th stood at 25,000, and now they are at the peak of closer to 63,600. The peak, of course, was a little over 70,000 itself. The FII long contracts are now just 29%, with 71% of their exposure in index futures on the short side itself. And this is over and above the selling that they did in the cash market of close to around 2,500 crores in yesterday's trading session. The SGX Nifty is indicating a lower start in today's trading session as well. But where's the silver lining? Well, if you just take a look at the SGX Nifty and the way the Nifty low has been between September 16, September 19 and September 22, we've bounced back from these levels itself between 17,450 to around 17,500. So if we do bounce back from that, these shorts which have been added over the last 2 trading sessions will have to cover their positions, and that will provide an additional fillip on the upside to the market. Were we to break the current lows, the levels we'll be looking at is the 50-day moving average, which comes in at around that 17,300 mark, and on the way up, 17,700 is something that we'll be watching out for as the 20-day moving average. In terms of Nifty Bank, which had been underperforming in yesterday's trading session, 400 points from where it is right now on the lower side, we have support coming in the form of the 20-day exponential moving average. So those are a couple of levels we'll be watching out for.
All right, we will watch out for that. Mangalam, Rima, as well as Vivek, thanks a lot for joining us and prepping us up for this trading session. With that, it's time for our first short break on the show. But after a tragic incident involving third-party recovery agents, the Reserve Bank has directed Mahindra Finance to completely cease recovery and repossession activity via outsourcing arrangements. We'll bring you all of the details on this story when we come back. Hi guys, welcome back. Now some important news. Days after a loan recovery agent working on behalf of Mahindra Finance mowed down a pregnant woman in Jharkhand's Hazaribagh area, Reserve Bank of India has acted against the company. The RBI has asked M&M Finance to immediately cease all recovery or repossession activity through outsourcing arrangements till further orders. So Abhishek is here to tell us more about this. Abhishek, this was an extremely tragic incident and looks like the Reserve Bank has been very quick to act.
Well, as always, RBI has been proactive, and now they have taken action against M&M Finance on the news that you mentioned. So they have directed M&M Finance to stop all the recovery operations that they do via third party until further orders. So M&M Finance can carry out recovery or repossession of vehicles activity via their own employees. So they have an employee base of around 19,750 odd number. We had Ramesh Iyer who did mention that, they have stopped third-party repossessions. They'll further examine whether and how third-party repossession will be used in the future. There is a brokerage note on the same Morgan Stanley who has an overweight rating with a target price of 225 per share. They say that the impact on collection and hence asset quality will depend on the share of outsourcing of collections that M&M Finance does. So alternative arrangements can be made by the company. However, they say that length of time that this order will remain in force needs to be seen closely. Spoke to few people, while analysts say that management has given a clarification. However, the impact on P&L is still unknown. So unknown can be a worrisome factor in trade today. Back to you.
All right, Abhishek, thanks a lot for getting us all of the details on this important story. But with that, we're going to get into a short break now. You don't go anywhere. There's lots more news and updates that we're tracking for you when we come back. Hey guys, welcome back. You're still tuned into Power Breakfast on CNBC-TV18, and the big news that came through earlier this morning, the board of Tata Steel has approved the merger of Tata Group's metal companies into Tata Steel. Nigel is here to fill us in with all of the details. Nigel.
Well, morning. The leadership at Tata Steel and the Tata Group has been talking about this for a while now. They have been talking about consolidating various entities, with their parent. And Tata Steel as well, for a while, the street has been speculating whether or not there is going to be consolidation of its holding. And that's precisely what's been announced. So they're looking at merging Tata Steel Longs, Tata Metallics, as well as TRF from the listed space into the parent, that's Tata Steel. Remember, for Tata Steel, already, they are the parent out there. And all these companies are already subsidiaries, which means they're already been accounted for in the consolidated numbers. Now, that's the swap ratio that comes up for you in the screen. Pretty much in line, if you look at it, barring TRF. Now, in the last 1 week or so, TRF is up close to 35%. And the street was wondering, why was that? It seems they had a bit of a sniff that this is likely to come about. But the swap ratio that's come out is highly unfavorable to TRF shareholders. So expect that stock to be in the red, while the others, because they're getting better parentage, there'll be synergy benefits, and also there'll be simplification of the group structure. Maybe they'll trade in the green. Back to you.
All right, Nigel, thanks a lot for taking us through the details. We're going to watch out for all of these stocks in today's trading session. With that, we're out of time, but a quick look at the Asian markets, which are all lower, led by the Korean Kospi index this morning, which is down 1.25%. And pretty much all of Asia is seeing some cuts. The SGX Nifty is going to be up for you. That one is down around 75 points right now. So we might get a bit of a negative start. But let's see how the trading session pans out from there. Thanks a lot for tuning into Power Breakfast. Bazaar Morning Call is up next.